Hey folks, Dan Frio here with your real estate update for December 8th, 2024. So today's what we're going to go over is where mortgage rates are. These are the top 6 products people use when they're buying their first house. But what we focus in on this channel is the economic news that's affecting these things, okay? So that's what we're going to do today. But unfortunately, there's not a lot of news out there. So what I'm going to kind of educate you guys on is why me, as a mortgage person, even as a trader, why do I sit on the sidelines for the first week of January? Basically, it's just to let the dust settle. And so let me explain to you guys. So first off, let's go through this. These are the top 6 programs people use when they're buying their first house. What this context is, it's not my rates. It's not Bank of America rates. It's not guaranteed rates. It's just a national average. What happens is Mortgage News Daily, right up through there, they survey lenders all over the country and they ask them these 5 questions. The 5 questions are: you're buying your first house, it's a primary home, and it's a single family home. You might be, Dan, that's me. Well, there's 2 more things. 1, you got a 740 credit score and you're putting down 20%. Is that you? Well, most likely that's what your mortgage rate's gonna be. If that's not you, I'm gonna show you at the end of this video how you can reach out to me so we can figure that out. So without further ado, let's get over to the economic news for today so I can give you guys some training and educate you guys on how to use this economic data when you're trying to buy your first house. And I'll tie this all together for you. So the first thing we look at is right over through here. Here's the economic data for the week. What you're gonna see is, Dan, there's no data for Monday, or there's really no data coming out until Tuesday. So what I thought I'd do today is explain to you guys why I usually sit on the sidelines for the first week of January. I do that with my stocks, and I also do that, I usually don't lock a lot of people in on rates because it's so volatile. Let me explain. Right through here, here's what you're seeing as news for today. You're gonna go through here and I look at the economic news every day, the markets and so forth. We're having a decent time on the market. NASDAQ's killing it today. The Dow Jones is down. Then I scroll down and see what's the news that's affecting this stuff. And you see Boeing's shares are tumbling because a panel blew off. So if you're a stockholder, you look at that and say, that's not good news for me, okay? On the mortgage side of things, you might look at other things like over here. Mortgage rates decline, pulling buyers back into the market. So what's happening? Why is this taking place? Well, interesting. Let's get over to this so I can educate you guys on why I sit out January of each year when I'm in stocks, and I usually don't lock in people when it comes to the first week in January also. Let me explain. So right here, here's what we watch on a daily basis. I watch right through here. This is the mortgage-backed security bond that trades on Wall Street, and this is how I figure out where mortgage rates are going, okay? But what I want to explain to you guys today is how this, where I comprise my data, all right? So here's what's happening in the mortgage market right now. This is where mortgage prices are. So this is what I follow, mortgage-backed securities. What you really want to dissect here is what's happening to the price of the bond. So the price is at 101.33 right now. It is up 19 ticks. If you squint, you can see that. So how bonds work is this. As the price of the bond goes up, rates come down. So remember just about 2 months ago, rates were like 8%. It's right over here. You can see the price is way down there. Well, as the price of the bond keeps going up and up and up, it drives down the yield. Well, let's say you were an investor though, and you bought right here this bond, and it kept going up in price. Remember, it goes up in price and the rates come down. So the price kept going up and up and up. Then what do? At the end of the year, a lot of people, they consolidate their positions. So if on tax purposes, if you're having a lot of gains on your stocks or bonds or your portfolio, a lot of times your financial advisor might be saying, let's sit on that until the new year because, maybe we can take advantage of long-term capital gains or just some tax consequences for this. Okay, so that's what happens a lot of times, especially if you have returns like this. The S&P 500, the top 500 stocks in the US last year returned 24% return. So what a lot of people did is they held those positions all the way through the end of the year, and then in January, because it's a new year, they might start selling those positions, selling off some of the gains just to take that money off the table and then maybe reallocate it somewhere else. Well, that's also what we do in the bond market, okay? So when you're seeing this, that's why a lot of times the first week of the new year, there's not a lot of traders on Wall Street or the bond pits. So some people are trading, they're selling, and those selling positions get kind of blown up because there's not a lot of active traders in the market. So you're not having a lot of traders in the background buying up those sold positions. If it's confusing, continue to watch my channel on a daily basis. My goal here is to educate you guys not only in real estate, but in financials, the finance markets in general. So I'm trying to get out there. I actually have some special guests coming on in the next month or two. They're financial planners. They're millennial people who run equity funds and things like that to help you guys dissect not only real estate, but the investment sphere that you have access to. So hopefully that makes some sense. So without further ado, if you're out there and you're like, Dan, how do I reach out to you guys for assistance? So we have two ways to do this. If you're already locked in with a lender right now, what can you do? Are you stuck? Well, you know you're not stuck. Because remember when we saw mortgage rates right through here, rates, the 52-week high was 8%. That was in October. Well, let's say you closed in October and you have a rate at 8%. Now rates are in the mid 6s. Should you refinance? I don't know. But I can give you some ideas on how you can reach out to us to figure that out. Or let's say you locked in and you haven't closed yet. What can you do? Here's what I need you guys to do. Upload your loan estimate or your closing papers into this tab right here. So what we're going to do, we're either going to, if you haven't closed yet, we're going to get back with you and say, okay, here's what we can offer you at this time based on your credit profile and other details. Or if you've already locked in, we might get back to you and say, okay, it might be a good time to refinance right now. A lot of people do say refinancing costs a ton of money. I'll explain that a little bit with you. In Chicago, for example, if you're buying a house, your title fees, one of the biggest pieces of the cost structure when you're buying a property or any kind of mortgage. When you're buying a house, your most expensive fees are going to be your title fees. Okay, those title fees can run you $3,000, $4,000, $5,000, even $6,000. However, if you refinance, most of the time in the Chicagoland area or Cook County, there's a flat fee of about $800 or $900. So a substantially lower amount than it would be to buy. That's why a lot of times we say, it's not as expensive to refinance as it is to buy. So if you're looking to refinance, I'd love to help you there. But if you're you're kicking the tires right now to see, do I qualify based on my credit, my income? Do I have enough money for the down payment? Don't disqualify yourself. Okay, what we ask you to do is reach out to us. How can you do that? Well, one, you can hit the apply now button. You can fill out the information there, or you can also call us. So if you're at therateupdate.com, just scroll down. You're going to see all kind of tools here, blogs, mortgage calculators, and everything else. When you get to the bottom of this, you're going to see two things, our 800 number as well as my email address. And there it is. So feel free to email me, guys. Yes, it is me replying back to you. So if you wanted to run a passive scenario through me, I'd love to help you in that area as well. So sorry there's no economic data today, but at least maybe you learned a little bit on how the markets work in general, especially at the beginning of the year. So God bless, guys. Thanks so much for watching. If you haven't subscribed yet, please don't forget to do that right down below. So every time I post a video or we do a live event, you get at least warning that maybe you can join us at that time, or you might see a video that really intrigues you, might be sitting in a position right that you're looking for at this time. So thanks again for watching, guys. Hope to see you here tomorrow. Bye-bye.